We've got another amazing guest coming on to Wise Wealth podcast. We've got Thea. Really excited to see where this conversation goes, and really sort of digging into startups and a little bit about your background. So if you can, give everybody that's listening a introduction about yourself.
Well, thank you. Thank you, Samuel. Thank you so much for having me on. I'm very excited about this. Is obviously my favorite topic, so excited about today. Yeah, so my name is Thea. I'm Norwegian as a background, but I'm actually based in Copenhagen, Denmark, one of the other Nordic countries. So I have a background from the banking industry. I've been working within the banking industry for a decade before starting Unconventional Venture, which is the fund that I run today. One of the things that I always knew was that I didn't know what I want to do when I get old, but I knew that was not going to be in economics. I wasn't going to work in finance. I wasn't going to work with sort of the evil Knievel out there. But for some reason, I ended up doing that because I studied philosophy and economics. And through that work, it became quite clear to me that working with climate and particularly climate change strategies was the utmost important place that you can make a difference. So I worked with that from a banking finance perspective, pushing for responsible investment products, pushing for sustainable finance products. Yeah. And that was for sure an uphill battle. So fast forward for today, it became quite clear that the lack of perspectives and diversity was actually one of the drivers for creating Unconventional. And we are, Unconventional Venture is a Nordic-based venture fund. We invest in what we call underrepresented or underestimated founders in the founding composition of the teams. And then in addition to that, they run businesses and have created innovations that have true impact at the core of the business. So that's in short.
Yeah, well, it sounds really interesting. How can we ask how big is the fund and how did you come around starting that? Was it based off of your own net wealth or a pool of investors? How did that come about?
Yeah, so the fund today, we've had a sort of a micro nano fund before, but the conventional, traditional alternative investment fund that we have today is targeting 30 million. We're just about to get over the 20 million now, euros. So this is a traditional structure. And when we started out, or when I started out from moving out of the bank, wanting to build Unconventional, it was actually impossible to set up a fund. In order to set up a fund, you need wealth and you need a lot of resources because it's costly. And it also takes time to fundraise. So you need from a starter perspective, you need a proper runway, right? And at that point, I didn't have that. So I created different concepts that can sort of create and make Unconventional afloat while exploring how could I actually start unleashing that potential of underrepresented founder. Because that was the core of the strategy for Unconventional, is that we can see there's so many founders out there who are building amazing businesses, but not necessarily getting the funding, or if they are getting the funding they're getting is actually less than their counterparts that are more traditional peers, like, to be honest, white, straight, male type of founders. So creating Unconventional was kind of up against the tides in many ways. The structure in itself, creating fund, is very difficult. We were backing founders that traditional had a lot more obstacles to get the funding, and on top of that, we only wanted to invest in those businesses that we believe in, that our businesses be building impact at the core. So today we managed to get there. We have an institutional backed fund. We have institutional investors from Denmark, Norway, Sweden, even the UK actually. But it was really about building blocks because we couldn't get that. And it took us 5 years to get where we are today. So it was really about starting in small, building that track record. Crowdfunding platforms was a good place to start. Yeah. Started to supporting companies and also really making sure that kind of community where we're backing founders that traditionally has been underinvested or underestimated, that we can create that foundation and community of these founders that we could support. So it's been a long journey to get here where we are now with our first time fund, but on the flip side, we also built the foundation and we know the ecosystem that we want to back quite well now after pivoting and exploring and testing for so many years.
So what sort of have you started to actually now invest into those startups?
Yeah, so we to date we've actually done 9 investments. So we did our first close of the fund last summer, and we've done 9 investments in total. We're just about to finalize another 2, and that's companies from the UK, from Norway, Denmark, Sweden, particularly. What they all have in common is that they have a diverse founding team, or they have a founding team that is overrepresented by women, people of color, LGBTQ+, which is what we define as underrepresented founders in our investment thesis. In addition to that, they have a very clear scalable impact at the core of their business. So we invest climate and sustainability related, but we also invest towards more like health and social impact related businesses. But what they all have in common is that it's linked to the core of the business. So the more they scale, the more CO2 is reduced, the more social impact is created, the more people are educated, if we're looking at an edtech and so forth. So that's sort of the common denominators. But on the other side of that, it can be very different from hardware. For instance, we have one company that is desalting seawater offshore using wave technology. So it's a very industrial heavy development type of startup. Yeah. And then on the other side, we have very B2B SaaS type of businesses that are creating these kind of changes, but through a different software tool. So we're kind of quite agnostic in terms of type of technologies, but for us, what has to be there is the diverse founding team, because we believe they are outperforming, and we can see that from the research, and the impact at the core, because we believe if you have impact at the core and you're solving a truly global problem, you're going to have much more probability of success going forward.
I agree. I'm sort of trying to march on that mission myself. We've got an education company at the moment. We're just trying to solve financial literacy. It's a big problem, I would say globally, not even just in the UK, but there's a huge lack of financial understanding around basic finance, understanding mortgages, understanding credit cards, APR, things like that. So we're on our own sort of mission to try to tackle and solve that. So no, I can appreciate where you're coming from. Did you say one of the companies that you invest in is taking seawater and dissolving it? And what are they like purifying that, or what they are?
Yeah, so they're literally, so what they built is a buoy that is out offshore in the sea, and using desalination processes. So when we extract the salt from seawater and create sort of fresh water and drinking water, that's a known process, and there's a lot of plants around the world that does that today. However, the process of doing that is very CO2 intensive. You usually use a lot of aggregated, or you use a lot of fossil fuel energy and non-renewable energy to fuel that. At the same time, there's also this brint. So there's this like the salt lake coming out of this process is also very environmental damaging in concentration. So what they built, and this is a Norwegian ocean tech company, they built a buoy that is actually taking offshore and desalting the seawater using wave technology. So it's renewable energy. You're not using any additional CO2 to actually create that desalination process, and then they're pumping it back to shore. So when we're looking at now the need for drinking water and how that is increased globally, but also having it in remote places. This is a smaller plant, so you don't need like massive land areas to actually create that. So that's, besides us obviously seeing that there's a diverse team, getting to know the team and get conviction about this is the type of team that is going to make that extra type of 1 out of a million type of founders that we want to back. If that's in place, when we, in addition to that, see that this is a global problem, it's a problem that's not going to increase, it's not going to decrease, it's only going to increase going forward. You're taking some of those risks out of the investments, and this is some great opportunities. And then obviously at the end of the day, doing good on top of that obviously also makes us very happy about
you get that good feel factor, don't you, of backing them. How on earth do you value businesses like that are potentially early starting businesses, and how do you sort of like convey that message to the founders, you know, when you're trying to go through that process of acquiring a percentage of that company? Are you looking at taking like a majority stake, or are you taking a minority stake and helping support the growth of that business?
So we go about this, even though our name is Unconventional Ventures, we go about this quite conventionally. So we look at starting with the founding team. And I would say we, obviously, when we get the deck, what we sort of proof check for, okay, is it diversity in the team that needs to be in place? And that's not assessing the team, though. That's sort of the checkbox that needs to be marked. And then can we see this is a scalable impact at the core that is of interest for us? Those are the two things that needs to be in place in order for us sort of taking a deep dive into the industry, and then, or into the pitch deck and the company. And then we should go through it very very process strict, like all type of investors do. You know, we look at the market, we look at the competition, we look at the opportunity for scale. We also look at, you know, what is the probability of actually getting this to the next phase in terms of raising the next round. So even though, you know, our missions are noble, and we kind of get a lot of that stamp, you know, we're impact and we're impact and we're impact, yes. But we are looking at how we can very strategically scale that impact, and also meaning that how that business can be scaled sustainably on a financial sort of perspective. So we go through very much the same that we do in a traditional venture fund. Look at the market, look at the product, look at the competition. You know, how does the IP strategy look like? You know, what is defensible, whether that's in relation to the technology, but also in relation to what is defensible in terms of the market. And then for us, particularly in the early stage, a big portion of this goes in how do we, you know, really pressure or sort of test the founder, and typically the founder composition in terms of how do they work together, how do they respond to our questions, how do they what are we hearing in the reference calls, and typically also trying to do those reference calls, not only the ones that they recommend themselves. So it's the earlier it is, the more important it is to really get a feeling of, is this founding team someone who can take this from 0 to 1,000, and do they have that in them? Little bit later stage, we have a little bit more to dig into in terms of operations, in terms of experience from other investors, and potentially also clients and partners that they would be working with.
No, it sounds really interesting. I suppose from the concept that you're looking at, what happens if you have a good startup business that is, let's just be honest, it's all white male, but they tick the box of social impact and making a difference and change? Are those people written off because they don't tick that underrepresented a category within the fund?
So at UV, we are like all type of funds. We have an investment strategy and we have a thesis. So our thesis is, when we look at the outperformance of diverse teams, that's sort of what we're backing. That being said, we're going to pass, or, you know, there's a lot of companies out there that we're not going to invest in, and that is not going to fit our thesis. Not to say that they're not going to be good investments. It's kind of like if you have a climate fund, you're going to pass on, or you're not going to invest in a lot of interesting health tech companies. Not to say that they're not going to do great. So it's kind of the same way we're looking at this. We're just starting with the teams. We're starting and seeing, we see there's an opportunity statistically by backing these type of founder compositions that traditionally have been underestimated and under sort of represented. We have a higher probability of succeeding and a higher probability of getting those outsized returns at the end. So I think it's really about, as a fund, sticking to your thesis, and you're going to have to pass on a lot of things that is not in your sort of focus area, and that's the same thing for us. So the short answer is yes, but it's according to UV's thesis and investment strategy.
Yeah. What made you guys decide to go for that sort of thesis that goes, this is what we want to back, this is what we want to create? What was the sort of belief behind that?
So we both had, so my co-founder Nora Bailey, she's based in Stockholm, Sweden. So we both have very different perspective in coming into understanding the diversity of the business case of diversity. My background was working in the finance industry and seeing how the very concretely how the lack of perspectives, how the lack of representation created lost opportunities at the top level. So if you don't have a management who either listens to more diverse representation or don't have diverse representation themselves, they're going to lose out on opportunities. They're going to be slow movers on areas that, for if you brought in more perspectives, would be a no-brainer to fulfill. For instance, like creating climate change products or sustainable finance products, that we've been talking about that for about 15 years. It took way too long to get those products to market. And when they came to market, it was huge, a lot of competition in that area. And now everybody's screaming for those type of climate products. If we or the particular industry that organizations that I was working for, we're having more perspective and more sort of boldness in moving in that direction, we could be a front runner in that area. But now there's extremely crowded. So it's the same way for me. It was also really when I started to work with impact startups, and particularly looking at female founders in the Nordics, I could see the same type of pattern. There was all these missed opportunities from the investors. I myself didn't have money to invest, but I could see how these investors were losing out on these incredible opportunities that was there, but simply wasn't deciphered or analyzed in the same way that you would do with other type of founding teams. So it's really it's kind of a multifaceted both challenge and opportunity in terms of, if we don't have more diverse representation in who's writing the checks, who's actually deciding who gets the money to try and pivot and develop their business, then we are going to lose out of opportunities. Luckily now, 5 years later, there's more and more investors like us and more understanding in how that's going to look. But it has been a lot of lost opportunities in that respect.
Yeah, interesting.
Sorry for my, I think my
right.
Yeah, okay.
So
yeah.
I suppose from the portfolio side, what sort of like exciting health companies are you sort of investing into at this moment?
So for us, health has been a big category. I think up to date now we've done a lot. About 20% of our investment goes to health. Okay. Femtech is obviously an area that is quite interesting for us. We can see that it has been traditionally under researched and sort of under valued as an industry. That change is coming now. So there's more and more larger companies reaching the Series A's, reaching the Series B's and C's, particularly in the US, but we also see a couple of deals here in Europe. So there's a very interesting uptake in that area. And there we go, we look at everything from fertility to postpartum and prepartum and postpartum care. We're also looking into menopause as a big area of ours that we're quite excited about. But we're also looking at treating diseases that are typically female related, that traditionally haven't been developed or haven't had that focus from the investor community. And what we really are quite happy to see is that there's more and more investors, particularly female investors, who has a specific mandate and specific focus to invest into these type of companies. We can see that the femtech industry in general is one of the fastest growing industries. So we continue to see that that's going to be an interesting area for us.
No, it makes sense. I think it's quite it's quite exciting when you see the different sort of sides that you're looking at from an investment perspective and how sort of specific they are. Is there any of them, I suppose, like, for example, it makes sense with the water one, can we do this in a socially sort of, well, eco-friendly way of being able to produce water from the largest source that we have, of which is, covering majority of the planet. It makes sense to be able to do that. Is there any investments that you've made that you're super excited about that you think, if we can pull this off, this will be huge? Is there any projects like that specifically that come to mind?
I mean, it's always difficult when you get asked to choose between your dollars, right? Because when our investments has been through the process they've been, it's because we kind of are in love with them, and we do believe that they're going to go from here to 2000. I think maybe there's no doubt that the Norwegian ocean tech there's so many areas that, you know, this is a huge global problem. You know, it's making a process that is so acute needed, CO2 neutral. What's not to like? But we just did a Danish investment in a synthetic biology company. So what they created is a precise fermentation platform in order to basically develop more sustainable colors for the fabric industry. And we know that when we look at the fashion industry, the coloring process of the textile is actually the most sort of hazardous and most environmental unfriendly process of that industry. So what we can see with Octarine is that they have now developed a process that can really revolutionize the way that we're actually coloring fabrics going forward. And the textile industry, even though we should all reduce less, we should all, you know, buy less new clothes, it's still going to be there. And that type of industry and that type of solution for that big challenge in the fashion industry, we're quite excited about. We also have a very interesting company in Sweden that we backed really, really early. And that's more on the social and educational side. What they had created, and what Ebony, the founder, has created, is a more efficient way for researchers to get the research out. One of the biggest challenges today has been that the publishing houses for research is very costly for the universities, both in terms of getting the research out there, but also having subscriptions to read the articles once they're published. So what Ebony with her Cypher is doing is actually creating that open access and making it accessible in a completely new way. So you're basically shifting some fundamental business modules that is ultimately hindering research and innovation to get out to the general public and to the universities. And that's one of those, when we sort of drilled down and really went into the impact case for this is really about democratizing access to knowledge. And democratizing access to knowledge is, you know, if you find a way to do that at scale, that is sort of both good for the researcher and also good for the universities, and ultimately good for the taxpayers who are funding the universities. There's like this full circle of something that can become really, really big and have huge effects in the type of impact that we will see at society. So I would say that's sort of the two very in very different very broad and very different branches, but there's some similarities in terms of there's some really big challenges that can be solved by tweaking some of them.
It's a very it sounds like it'd be a very exciting week in your life, going between the different companies. You know,
I would say that's probably the best day, you know, having updates with our portfolio companies. I mean, look, let's be honest, setting up a fund and running a fund, and particularly small fund, in a very competitive landscape, and even in a landscape with very difficult market conditions, it's not easy. And there's a lot of sleepless nights, and there's a lot of concerns all the time. It's been like that for 5 years. But the best part of the job is finding those founders, investing in them, and then following them, and then supporting them at our best abilities. So it all makes it all sort of all worth it at the end, I would say.
Yeah, we spoke briefly earlier about the access into venture funds and how to make that more available for individuals. What's your thoughts behind that?
No, I think it's one of the biggest challenges that we're facing when we look at venture today and early stage funding. So I think there's a little bit different regulation in the Nordics and in the UK, but some of the similarities are there. So overall, it's allowed to invest directly into companies as a private person, and you don't need to have certain thresholds of wealth to do that, though it's high risk. when it comes to investing in funds, that funds are ultimately more de-risked in terms of investment profile, right? Because you invest in several companies. It's not only one startup, and we know there's only 1 out of 10 startups that survive. So it's a high risk, but also high return type of game. So you would want to diversify your investment looking at that, but that's actually not accessible for people without wealth, or people who don't, like myself, who couldn't reach that threshold of investing a minimum of 100,000 euros. In Europe, you need to invest at least 100,000 euros to be allowed to invest in a fund. And when we started out 5 years ago, we had sort of multiple missions. We wanted to invest in diverse founders, we wanted to invest in impact, and at the same time, we also wanted to democratize access to investment. Yeah. That was possible, but it was also very admin heavy to do. So what we did was we created an entity that allowed for non-professional and non-sophisticated investors to actually invest, because we predefined the companies that we were going to invest in. So in that sense, it was more like a syndicate. Yeah. But that's obviously from a scale perspective, it's difficult to do on a continuous basis, and that's always what's difficult with these syndicates, and getting smaller investors to invest in funds. But the biggest challenge is that funds like ours are not, it's not accessible for people unless they invest at least 100,000 euros. And for a lot of people, that's obviously too much to invest in a high risk asset class. So I think there's I really like that there's platforms like Odin that you have very successful in the UK. There's also a lot of crowdfunding platforms that do have had success in terms of getting more people into investing to startups. But I think still on the fund side of things in investing, we still have some challenges there. And I wish that we could open up and be more accessible for everyone, but regulatory wise,
if there was a venture capital sort of VC platform where you could see the different funds portfolios and then you could buy into them, that would ultimately be a nice avenue. Because I think, with the likes of crowdfunding, I've got investments in Crowdcube. I bought into Monzo Bank and I bought into Moneybox. But I also think that the access to liquidity of, okay, we can see the growth, we can see you're doing well, but nothing's been public. None of these gains can be released. It's very hard for someone, I would say, that's even a small investor on Crowdcube to go, I need to build up a portfolio, but I won't have access to any of this money potentially for 5 to 10 years. And that's if they are successful. And I think that's where the power of the funds come into play, because obviously if those businesses are making a profit or returning, then there is something that's there that can be returned to shareholders, at least annually from a dividend point of view, or an aspect along those lines. It makes it a lot more attractive.
No, and I think, there are platforms who've tried to do that and try to set up entities or sort of structures where it would be possible for retail investors to actually invest in funds. But it's really down to, again, the whole setup in terms of how to make it accessible and how to live up to regulation. And then at the end of the day, the only ones who actually has the resources to do that is typically the really, really large funds. Yeah. Whereas where you can make an impact is probably the more smaller funds, but they do not have the extra resources to set up those kind of alternative vehicles. So it's a really it's a tricky one in terms that we need the volume before that can actually be initiated. But it's a pity, because at the end of the day, it's the retail investors who are losing out on getting access to these opportunities. And if we really want to democratize wealth and we want to democratize access to investment, that is something that has to happen.
And it's just trying to get the right people behind that team to be able to go and do that. it's definitely one of the next challenges. Maybe that's on the fund list to go down that route. What about the sort of the need for companies and businesses to attract sort of diverse talent within a company?
Well, I think we've seen a lot of um, diversity washing over the years, and there's this acute need for companies to really push the needle and really do something different. They know that there's a war on talent. They know that they need to be at least perceived inclusive in their view in order to attract the best talent. I think sometimes the companies underestimate, how easy it is for potential talent to see through whether this is a truly inclusive environment and whether they truly mean diversity and inclusion. You can have a very, very sort of polished inclusivity policy or hiring policy, hiring for more diversity. But if at the end of the day, the management do not reflect the type of organization that you want to build, it's a challenge. And people will see through that. And the candidates you want to attract will see through that. So it's really about making sure that you also work on the top as well as on the bottom in terms of creating that truly inclusive environment that can attract that type of talent. And I think what we see from the type of companies that we back is that because we're backing diverse teams, we also have teams that are very homogenic in the sense that we have two white women or one woman. So in that sense, it's not diverse in type of representation in the team, but it ultimately, we can just see that the way things are hired immediately in the company is more diverse. And there's also research coming from McKinsey in terms of that. So even though you have female leadership, we will see more diverse hiring processes in these companies. So I think for us, that's sort of the natural way of how things are actually moving and how they're developing into that. When you make sure to be diverse at the beginning, there is this saying that, particularly for startups, if you haven't managed to create an inclusive structure and a diverse sort of pool of employees when you reach the number of 11 employees,
okay,
it's really difficult after the 11th to actually change the culture and make the culture inclusive for other type of profiles. So that's why it's super important to start really at seed and really start early in terms of building those inclusive structures to be attractive for all type of talents that you would need to.
Well, I think it's been very interesting, this conversation. Very interesting, talking about a wide, diverse range of businesses here and from an investment point of view. Yeah, very interesting. So I suppose for people listening that are getting started in their own startups, on their entrepreneurial journey, and obviously potentially bumping into someone like you later down the lines in their journey and their career of their startup, what are sort of tips that you would give to them early on in their startup that they can take on board and potentially help them to get to a level of where they're ready to be invested in?
I would say really when you're thinking about, if you have an idea, maybe you have a co-founder, maybe you don't. If you don't have a co-founder, I would really, think about maybe finding someone to set up a company with. Setting up a company is super hard. I started out on myself, and then I was lucky to meet my partner, Nora, in quite early in the process. And it was just a magical match. And I already then had sort of tested being on my own. And I can see there's so much strength in being two, and potentially also three. I haven't tried that. But I think that was probably when you start out, really think about, how can I create this amazing company and solve this problem that is super important to me together with someone. The next thing I would say is that try to do as much as possible without raising external capital. And I know it sort of sounds a little bit silly coming from a venture fund, where that is actually, we want you to take our money if we believe in you. But the more you can do without taking in investments just keeps you in a super more powerful position Obviously, there's some industries that are easier to start pivot and start testing than others. And there's also some industries that have more grants or more sort of soft funding that you can play around with than others. But I think the more you can show, and that goes back to what is super important for us. We know that it's very different between some founders have a lot of resources and a lot of sort of network that can help them from the beginning, and some founders don't. What we look at is really how much was accessible, how much resources did you have available when you started out, and how far have you gotten with those limited resources. So it's not about how far you've gotten, period, is how far you've gotten compared to how much resources you had available, because that says something about the grit, and it says something about the innovation and the tenacity of these founders that we're really looking for. So show that you can build something and be innovative on how you do that, and then when you start to sort of plan your fundraising journey, be very realistic. It's always, I remember someone told me when I was setting up my first fund, well, fundraising takes 3 times longer than you expect. And it's actually been holding all the time. You can just multiply. So you have a plan, and then you potentially have to multiply it by 3. And that's what it's realistically going to look like. So be in the position of having control of that process and not being in that desperate situation where it's the money has to come today, otherwise things are going down. I've been there myself as well, where it's been on the hours. It's not fun. It's a great learning process. But I wouldn't want anyone to be in that position. You're probably going to be in that position regardless, but just trying to minimize how many times you have to be in that position, I would say is a good advice. And then is one of my things that I really try to follow in our journey. And then I think it's really about, there's no sort of perfect way of doing it. So when I started out, I didn't have a background in venture. I came from the banking industry, but I never set up a venture fund before. So I think is this also this part about, what you want to solve and what you want to build, then get a lot of feedback. But also in that path, it's super important to sort of start also filtering out and listen to your gut feeling, because the gut feeling is what sort of made you start this business, because you could see something that could be solved in a new way that nobody else has solved. Somebody else had probably seen it as well, but you're acting on it, right? So I think it's really about finding that filtering mechanism to make sure that I'm getting a lot of advice, a lot of it is really good, and some of it is actually contradicting. So at some point you need to sort of steer the path on your own. I think that's also stopping up once in a while and actually sort of testing, is this, where do I stand in all these directions that we potentially can go? I think that's super important.
I think there's a lot of takeaways there for the listeners. Honestly, thank you so much, honestly, for joining us. I think it's been really eye-opening to what you do, and also to all of the listeners. For those that are listening that want to follow your journey, what you're doing from a fund perspective, where can they follow you or find out more information?
Yeah, so I am on LinkedIn. LinkedIn is my favorite one. So if you want to find me on social media, that's LinkedIn. Otherwise, we have our webpage. So it's unconventional it's unconventional.vc. So www.unconventional.vc. And then also there's an email on the website. And that's just my first name, Thea, and then at unconventional.vc. So I'm actually a little bit old school. I'm on LinkedIn and email. That's sort of where you find me.
There we go. Well, thank you so much for joining us. It was awesome. It was a pleasure. Thank you.
Well, thank you so much for having me, Samuel. It was a pleasure.